For my work, I use two websites. On one site, I get information, and on the second site, I apply this information for work. The first site is called TradingView. I just open the homepage of this site, find it through Google, and for now, I leave it as is. That means I don't do anything else here. I don't log into my account, and I don't buy anything. I'm going to use just one free tool here. Now, I'm switching to the second website. This is the broker's site. I've already logged into my account here and opened the trading terminal. And I start by setting up all the parameters. I open 1 minute trades, so here I set 1 minute. I open trades for $100, so here I set accordingly $100. And then I choose the chart I will be working with. I go to the asset selection menu, and here I work with currency pairs without the OTC mark. This is a very important detail. For instance, I see the Australian dollar and the American dollar with a payout of 92% for this currency pair, and there is no OTC mark next to this currency pair. Basically, this currency pair suits me, but I already have an open currency pair of Euro and British Pound. And here, the payout is exactly the same, and there is also no OTC mark, so I'll stay on this chart. What am I doing now? Now, I need to open the same currency pair on the TradingView website. I am going back. Again, I don't enter anywhere here, I don't buy anything, I just find the search bar and type in the currency pair name, Euro and British Pound. I go to the first link and click the See Overview button. The main page for this currency pair opens, and here I use technical analysis. So I go to the Technical Analysis tab. And this is the page where I spend most of my time. So, how do I work with this tool? Briefly about what it is. This page features a large number of different indicators. Each of these indicators operates according to its own algorithm and constantly monitors what is currently happening on the chart. Depending on its algorithm and the current market situation, each indicator makes its own prediction on where it thinks the price will go next, up or down. On the Technical Analysis tab, there is a summary. This summary provides a consolidated outcome from all indicators. So, for example, if I see in the summary a forecast to buy or strong buy, it means that most indicators are leaning towards the price going up. If I see sell or strong sell, it means that right now, most indicators suggest that the price will continue to go down. And I rely specifically on this technical analysis in my work. Since I open 1 minute trades, I conduct 1 minute technical analysis here and see that the summary says to sell. This means that most indicators suggest that the price will go down further. Therefore, I am opening a down trade. And again for 1 minute, since I was using the 1 minute technical analysis on the TradingView website. Now a few words about why I use an amount of $100. The thing is, during my workday, I have many trades closing at a loss. So it's quite normal if even half of the trades I opened during the day close at a loss. This happens. It's part of my job. But I would like that by the end of the working day, my balance is higher than the amount I started with. Therefore, to effectively manage losses, I use a doubling strategy. How does it work? So, right now, I opened a trade for $100, and if this trade closes at a loss, then I will open the next trade for $200. So, I will cover the loss with the next trade. We are currently observing the current trade. We see that it is closing at a loss. I return to the technical analysis website and refresh it. I see that nothing has changed, so I open a $200 down trade. If, for example, this trade for $200 closes with a loss, then I will open the next trade for $400. And let's imagine that then a $400 trade closes in profit. What will happen? I will receive $768 in total. Of this, $400 will go to cover the trade itself. I will have $368 left. Of this, $300 will go to cover 2 previous losing trades. That is, one trade for $100 and another trade for $200. And I will have $68 of net profit on top. That's why I use the doubling strategy. It allows me to open and close several losing trades in a row and then cover all the losses with just one trade and earn a little more on top. In order to have many attempts to recover my losses, I use a very small amount. I stick to the rule of using an amount that does not exceed 1% of my balance. That's why I opened the very first trade at exactly $100, because then I can cover with $200, $400, $800, and so on. So I have many attempts to cover. I can make, for example, 5 mistakes in a row. I hope that's also clear. That's exactly why I use such an amount of $100. So I opened a trade for $400. Here I can prepare the amount for the next trade. I will open the next trade for $800 if this trade ends in a loss. If this trade ends in a gain, I will simply secure some net profit, cover all losses, and then return to the original trade amount. So in my case, that's $100. So after I've covered all my losses, I return to the initial trade amount and start all over again. If I open a trade for $100 and it immediately closes with profit, then in that case, I simply keep the $100 and do not use doubling. So we see that now the technical analysis has changed to sell. Therefore, I will open a down trade for $800. And here I can prepare the amount for the next covering. Here comes an interesting situation. I already know for my trade amounts that I cannot simply enter the amount of $1,600 here. Because if I open the next trade exactly for $1,600, then the payout amount will not be enough to cover all the losses and to take a little net profit on top. So after a certain step, I start increasing the trade amount by slightly more than double. So the next trade, if anything, will be opened for $1,800, again to cover all losses and make some extra profit. This is the essence of the entire strategy. So there are a few seconds remaining, the price is going down, and it's quite likely that I'll just lock in the profit now. And yes, my trade closes in the positive. Here, I can return the amount of $100 and I will open the next trade also for $100. The technical analysis hasn't changed at all, so I am simply opening a down trade. And by the way, you can notice that after each trade, regardless of whether it closes in profit or loss, I always return to the TradingView website. Here, I update the technical analysis because if I just leave the page like this, my technical analysis won't update by itself. To see the current summary, I go back, set it here for 5 minutes and then return for 1 minute. Only after this can I be sure that I am now seeing the current technical analysis. Even within 1 minute, technical analysis can change very quickly. That is, even during the recording of this video, there was a situation when the technical analysis indicated sell, then for one trade, it changed to buy during this price jump, and then it very quickly returned to the sell value again. So that's why I quickly reacted and opened exactly the down trade I needed, and then I made a clean profit on it. Well, here's another trade closing in the positive for me, and on that note, I will slowly wrap up my video. I hope it was useful and interesting for you. If so, do not forget to stay active. The best way to thank me is by liking and subscribing to my channel. I'll be saying goodbye now. I wish you success. Bye.